All right, so welcome back to Law and Crypto. My name is William Kraus, and I'm an attorney focusing on litigation, governmental investigations, and other disputes related to digital assets and blockchain. If you've been watching this show or the Gentleman of Crypto, you've probably been hearing about the SEC a lot. And needless to say, they've been highly active in the crypto space for some time, really starting back with policing ICOs back in the last bull run and expanding quite a bit since then. So this week, we're going to talk about a few recent SEC actions as part of a larger trend that I'm going to sort of dig into. First, we're going to talk about what I've described in the past as a turf war between the SEC and the CFTC for jurisdiction of the crypto market. Then we're going to talk about some recent comments that were made regarding the jurisdiction of the SEC. And then finally, we're going to chat a little bit about last week's complaint from the SEC around insider trading or alleged insider trading involving a Coinbase product manager. So before we do all that, I want to thank you for joining the 10th episode of this show. It's been fun putting this content together for you, and I hope you've enjoyed my thoughts on how these cases, speeches, and even hiring decisions all sort of fit together with regard to the sort of macro policy landscape that we're all dealing with. Needless to say, it's an amazing time to be involved in law and regulation related to crypto, and I think it's a good thing for anybody who's involved in crypto or interested in crypto to be paying attention to what's happening right now, because, as I said before, we're really seeing the law kind of come together in real time. And it's just an exciting time to be in the space. So with that, and I don't want to forget my friendly reminder, this is your friendly reminder that while I am a lawyer, I'm not your lawyer. So anything I say should not be taken as legal advice or advice regarding your specific legal situation or investment advice for that matter. I also want to make clear that everything I say is my personal opinion, not necessarily the opinion of my law firm. My comments are being offered for entertainment and discussion purposes only. This could be considered attorney advertising in some states. So if you want to talk to me, you all know where to find me by now. My Twitter handle is WKRAUSESQ on Twitter, or you can just look up my bio at my law firm, Butzel, Butzel. So let's dive in. So back in May, I spoke a little bit about what I viewed as this turf war between two key financial regulators in the United States, the Commodity Futures Trading Commission, CFTC, and the SEC, Securities and Exchange Commission. So some of the things I covered during that episode was the expansion of the SEC's Division of Enforcement, Crypto Assets and Cyber Unit, adding about 20 new positions and bringing the group nearly 50 dedicated employees, attorneys, investigators, fraud analysts, etc. I noted that the group had been around since 2017 and had brought more than 80 enforcement actions related to fraudulent and unregistered offerings and platforms. And it's actually brought in about $2 billion worth of penalties during that time, which is obviously pretty significant. I also noted that in the world of SEC hiring, which usually sees about 10 new division enforcement positions open a year, this is a hiring spree for all intents and purposes, focused on crypto. And just like any good turf war, soldiers need to be brought in before the fight. And that's really what I'm going to describe to you as happening right now. So I think it was reasonable back in May when I talked about this hiring to expect the SEC had plans then, right, to launch more investigations, file more lawsuits, and generally continue what is called regulation by enforcement. Regulation by enforcement, as a quick refresher, is really a term used to describe an agency bringing investigations and court actions, even where the written regulations and guidelines aren't quite clear. And then they use that language in settlements or court orders or whatever to kind of establish what the rules are. To make a bad analogy, it's sort of like arresting somebody for a crime before it's actually a crime, in the law, and then turning around saying, well, of course it's illegal. Look, we just arrested this person for it. Needless to say, regulation by enforcement isn't a great thing. And some, including SEC Commissioner Hester Peirce, have suggested in the past that the SEC should actually be dedicating its resources not to enforcement or regulation by enforcement, but by preparing guidance that people in the industry can actually use and look for to figure out what the rules of the road are. So, others have taken note as well. Last Tuesday, Congressman Tom Emmer posted a video showing an interaction between him and SEC Enforcement Director Grewal at a meeting of the subcommittee of the House Committee on Financial Services, focusing on oversight of the Division of Enforcement. So that's a lot of words right there and names, right? So I'm going to simplify it a little bit. Two congressmen, or one congressman really, kind of got into it with the head of the SEC's Division of Enforcement. And I don't really do this, so bear with me, but I'm going to play the video. It's about 5 minutes. And I think it's important to sort of just listen to this, right? Because what he's really saying here is pretty significant in terms of crypto regulation and really, where the SEC is going, at least in the eyes of this congressman. And I think it's worth listening to. So I'm going to play this for a couple of minutes. Bear with me here.
For hosting this hearing today. Mr. Kraus, you frequently acknowledge that public trust and confidence in our capital markets has eroded. In fact, on October 13, 2021, you stated, quote, "The decline in trust undermines the investor confidence needed for the fair, efficient, and orderly operation of our capital markets. Put simply, if the public doesn't think the system is fair, they are not going to invest their hard-earned money." Close quote. I agree. But time and time again, you place the cause of blame for this erosion of trust almost squarely on the shoulders of industry participants and companies. Mr. Grual, the SEC is in no way blameless here. Chair Gensler's political regime at the SEC, carried out by its Division of Enforcement, has been characterized by a focus on using enforcement to expand SEC jurisdiction at the expense of public resources, public investment in our country, and public trust in our markets. It seems clear to everyone, except maybe those at the commission, that the SEC is not regulating in good faith.
All right, so right there, that is regulation by enforcement in a nutshell.
Although many sectors of the industry have grappled with the SEC's politicization of regulation over the last 14 months, it can be seen most clearly when it comes to the digital asset industry. Take, for example, industry sweeps. As you know, industry sweeps are not novel to the digital asset industry. They are a series of voluntary document production request letters as a regulator sends to everyone in a given industry who is similarly situated or is involved in the same type of activity. Mr. Grual, does the SEC Division of Enforcement do industry sweeps?
We do industry sweeps from time to time when we have a district.
Thank you. The answer is yes. I reclaim my.
All right, so I'm going to start this again in a minute, but I mean, obviously there's some political jockeying going on here. I mean, these are loaded terms, and the way that Congressman is setting this up is obviously got an agenda in mind. But, the industry sweep thing is notable. I mean, that's really referring to what Congressman Emmer described here, which is the practice of sending off letters, voluntary requests to various industry actors and saying, hey, every decentralized exchange, for example, you're going to get this voluntary letter regardless of where you're at. And please, correspond with us, send us documents. And they kind of read like subpoenas, but they're not actually legal documents. Now, the question is what happens when you don't participate with one of these voluntary requests, or if you're outside the jurisdiction of the SEC, which is what this will get to.
Are there currently any industry sweeps underway?
No, I can't talk about investigation.
You can't talk about it legally, or you won't talk about it?
It's our policy not to confirm or deny.
So you won't talk about it. All right. What do you do if a company, sir, cannot respond to a sweep letter because they're not in your jurisdiction?
If we issue a voluntary request for information, there's not much we can do. We can proceed with the subpoena and then the subpoena enforcement action.
So you do extra jurisdictional requests then?
Voluntary requests are just that. They're voluntary. They're the court's part.
Again, sir, I'm not asking about the request now. I'm asking about the people you direct those to. There are some that would be within the SEC's jurisdiction. There are some that are not. My question is, and I think you've confirmed it, that you do industry sweeps to extra jurisdictional market participants, people you do not have enforcement authority over.
We individuals and witnesses who may be in the market participants.
Are they within your jurisdiction and outside of your jurisdiction?
We're not limited by our jurisdiction when we're collecting evidence.
All right, so it gets a little jumbled here, and he's talking about subpoenas and voluntary requests at the same time. And I think the director kind of, is saying one thing and the congressman saying another. But long story short, I mean, he's basically saying we have authority to send off subpoenas to companies within our jurisdiction, right? And that makes sense. But he's saying that we don't have any limitations on who we can send voluntary request letters to. And that's kind of wild, right? Because it's basically saying that if there's an exchange and you're sitting in wherever, the UK, The SEC doesn't see much of an issue with sending you this voluntary request and asking you to send the documents. And, I think the broader message here is this the best way to sort of gain the public trust? And is this fair to sort of treat the industry this way, right? And we're going to listen to the last minute of this here.
We follow the evidence wherever it leads us, whomever it leads. There may be someone who doesn't work in the
So
industry.
I would say, sir, that I would ask me, so you do extra jurisdictional work. Some would argue that that's not appropriate. But Mr. Gruel, has Chair Gensler ever directed you, or to your knowledge, asked any of your colleagues to make it a bloodbath for companies who don't respond to a sweep letter, which are voluntary?
No, that's not that.
Interesting. We become aware that Chair Gensler has in the past directed the Division of Enforcement to send a sweep letter to a particular sector of the crypto community, designed to jam them into a violation that is allegedly unconstitutional. And if any company does not respond to said sweep letter, which I'll reiterate, as you've said several times, are supposed to be voluntary, then the SEC would make it a quote bloodbath for them. If true, I imagine such a tactic would significantly erode trust between the public and the SEC. Here's the problem. The SEC isn't interested in clarifying what areas of the crypto industry fall under SEC jurisdiction. We know that because FinHub, that you referred to.
All right. So the rest of it's, it's kind of more, politicization, if you will. But again, this is really interesting stuff because the SEC has all sorts of other mechanisms for getting records that they want, right? They have other securities regulators in other countries, for example, that they're friendly with. They can figure out sort of cooperation agreements, ways in which they can sort of have joint investigations, if you will, that allow them access to documents which are produced to regulators that oversee foreign exchanges and other crypto companies. And, again, what he's basically saying here is that SEC seems to be, having this vendetta, if you will, on various crypto companies. And the message, whether you're in the jurisdiction of the SEC or not, is you're going to play ball with us or else. And again, take this with a grain of salt, but this is really crazy stuff. I mean, in terms of where the SEC has been and where they are now with regard to crypto, I think it's worth discussing. So I'm going to shut this video here. All right, so let's dig back in. And this is all kind of particularly gone because at the same time, the SEC is saying to the crypto industry, and I touch on this, just come on in, talk to us, engage with us, and we'll figure it out. And I'll admit, when Commissioner Gensler took the reins of the SEC and he had all his crypto background, he taught at MIT, and, we saw this sort of wave of, regulators coming in under the Biden administration that had a lot of crypto experience. I thought, as many others did, that this is going to be a good thing for crypto. Somebody finally gets it, right? And, we're hopeful there'd be sort of industry cooperation. And I really don't think that's what we've gotten so far. Time will tell how this plays out, but it's interesting what Congressman Emmer is saying here, because it's sort of putting words to what a lot of people have been thinking, I think, with regard to, jurisdiction. So, which kind of gets us to this next thing I want to talk about, which is last week's complaint regarding insider trading. So specifically, I'm going to put it up again on screen. We have here the SEC's complaint in the Western District of Washington regarding these three individuals who used to be in Coinbase's, in assets and investing products group. So really what this case alleges is that these folks, who have job responsibilities that would have given them visibility into, new products, new crypto products, which were going to be launched on Coinbase, were using material, non-public information to sort of buy these tokens before listing and then sell them at a profit. And, for a while, anyone who's paying attention to the market would sort of see this, right? There'd be like this Coinbase bump in which whatever ABC coin, it'd be here at like 4 zeros and a 1, and then boom, it announced that's going to list on Thursday in Coinbase, and it shoots up and, like 10x's or more. So there was this opportunity here for, people like this allegedly to go and sort of cooperate, but get ahead of it, right, by sort of front running, if you will, the listing. And stepping back a bit, the magic language here is related to insider trading and the securities laws around that, which is a person trading securities on the basis of material information that the investing public did not have. So, and I think this is the first insider trading case under this statutory scheme, which really makes it unique and interesting. The scheme being Section 10B of the Exchange Act and Rule 10b-5 promulgated thereunder. If you're thinking to yourself, well, wasn't this guy talking about insider trading a couple of weeks back? I was, but I was referring to a criminal case involving the DOJ that actually piggybacked on wire fraud. And there I talked about how broadly applicable wire fraud is and how they didn't really have to go and prove that the underlying assets were securities. They could just say they did this thing that was bad, it was fraudulent, the same way that insider trading is fraudulent, but without having to find that the security existed for purposes of the specific statute. And that distinction is important, right? Because that means that when the SEC brought this case, they have to go and prove at some point before a court that all 9 or at least one of the 9 tokens at issue were actually securities. And that's a big deal. So, in fact, if they can't win, they can't convince the judge or jury that they are securities, they're not going to win the case. So the simple fact that this SEC brought the case at all shows, at least to me, that they think they're right on the fact or the law, that they're going to be able to get a ruling that says some of these are securities under the law. So then let's take a step back and look at this from a bigger policy perspective. You got to start thinking about this like a chess game. This isn't just one lawsuit in isolation. I think what you're seeing here is a highly calculated move by the SEC. The SEC leadership is smart. They know that this suit was going to make waves, and they know that they're going to have to basically test the waters in proving that a bunch of random digital assets are actually securities. They know that their jurisdiction is under attack right now, and you actually have members of Congress, like Congressman Emmer here, introducing legislation that is going to try to strip the SEC of most of its jurisdiction legally over the crypto market. Finally, the SEC knows that if they can get favorable language from a judge on an order in this case or others, or an ultimate verdict in their favor that just a few or all 9 of those tokens are securities, they're going to be able to use that for justification for more actions in the future. So I think it's interesting to sort of look at it from that lens and then take a look at who they're suing. I mean, because that's really significant as well. We have here 3 ex-employees of Coinbase versus the SEC alleged to have engaged in insider trading. Now, who's not named? It's Coinbase, right? Which by implication would have had to have been operating a securities exchange if these guys were trading securities tokens on Coinbase, right? But Coinbase isn't listed here. So why sue the former employees and not Coinbase? Well, again, this is chess. And I don't want to be cynical or disrespectful, but if you're the SEC and you're trying to make an example and get an easy win, trying to test the waters on what will potentially be a make or break moment for your jurisdiction over a massive, massive market, you think they're going to go against one of the best funded crypto companies in the world in the form of Coinbase? Or are they going to go against 3 individuals who have a lot to lose and might not be able to fund $1,000 per hour attorneys all day long like Coinbase could? And then you're going to just tee up a battle with them and try to force some sort of settlement or other resolution. So no, my hypothesis is the SEC is going to go after the little guys, get the W, and then use that legal justification for a bigger fish. You get a ruling there was insider trading on Coinbase, means securities were traded on Coinbase. There you go after Coinbase for operating unregistered securities offering or unregistered securities exchange. Sorry. It's just an example. And oh, hey, now that we've got this language that there's like 9 or 5 or 1 of these other tokens that were securities for XYZ reasons, according to the judge, you can then say that these other tokens that look like that are also securities. And then now there's 20 or 50 or 100 or 1,000 or maybe more tokens that are probably securities under the precedent established by this case. And then if those tokens, which are all now probably securities, were traded on other exchanges outside of Coinbase, you have the ability to go after them as well for being unregistered securities exchanges. And that's when things really get crazy, right? Because then pretty much every crypto exchange now has massive potential liability for operating unregistered securities exchange. So, again, this might just be a small sort of one-off insider trading case in some people's eyes, but I think this is, again, one move of a chess game that's going to get much more complicated and much higher stakes very soon. And again, that's where the fight's really going to be. It's going to be when the SEC goes after the Coinbase or the Kraken or some other exchange touching crypto, but the SEC will allege our securities with a solid jurisdictional base in the US. And it's going to be a fight for Middle Earth, to be honest, because this is their business. And the first exchange that has to register and start operating as an exchange is probably going to do what we saw with Ripple and delist a ton of tokens, right? When Ripple sort of got drawn into the fray with the SEC, what happened was a broad delisting across the US because none of these exchanges wanted to have the SEC turn around and say, we think Ripple's a security. You have Ripple on your exchange, therefore you're an unregistered securities exchange. So what happens when there's precedent that the SEC can point to that says these 9 tokens or these 100 tokens that look like those 9 are all securities? You can sort of figure that out. So, we'll have to see which one is first through the door, but I think we're going to get there pretty soon. And if the SEC is successful here, I mean, maybe they go and do the same thing. They pick off a smaller exchange, set an example there, and then go after a bigger exchange. I don't know. But I think where it all ends, if nothing changes, is it ends with what the SEC has been wanting all along, for cryptos that look like securities to be registered and treated like securities, and the exchanges that deal in them to also be treated like securities exchanges. So, I mean, is the conclusion inescapable? No, I mean, absolutely not. The SEC at the end of the day enforces laws, and it's written and interpreted, and the legislature is the one that makes the laws, right? Not the SEC. So if we get some legislation that says 90% of tokens that look like securities are not actually, or the SEC doesn't have authority over these types of tokens, the CFTC does, and we're seeing that kind of language come out all the time, like most recently, the RFIA Act, the sort of bipartisan crypto act that came out a while ago with Senator Gillibrand and Lummis. This all could change. And as an aside, I think the SEC knows that they're up against a ticking clock here. I mean, can they establish their jurisdiction as broadly as possible for the law changes? Will the law change if the SEC does that and establishes their jurisdiction? Will political will change? The SEC is bringing in sort of high profile actions. This is all a game of chess, right? And we're like at move number 2, essentially, in the game. But I think we're going to realize over time that these little headlines in isolation, the SEC increased the size of their enforcement, wing with crypto. But the SEC is doing this. There's comments here that the executive order says this or that, and here's an insider trading case, et cetera, et cetera. They're all little moves in a long game. So I hope this didn't sound too tin hat to you. I really, want to again highlight the fact that these things that are taking place right now are just moves in a much larger sort of policy evolution that's happening before our eyes. So that's what I got for you today. I hope, as always, that you've enjoyed our talk, and I will see you again in a few weeks.